You don't need any more than $100 and this book to get started investing in 2018. How are you guys doing today? My name is Apple, and today we are filling in the financial gap between schools and the real world. And today we're talking about how to invest $100 in 2018 for college students. So in this video, we're going to cover the different investment options available to you as a college student to invest $100 in 2018. I'm going to give you guys my number one pick on an investment for college students in 2018 with only $100. And then we're actually going to go out and I'm going to show you exactly how to invest your $100 in this investment option in the year of 2018. So guys, let's do it. And this is not financial advice. This is just for education purposes and my personal opinion. All right, guys, so what is our investment? Is it Bitcoin? Absolutely not. Is it bonds? Absolutely not. Those are going to be much too low return for a college student. Is it stocks? Nope, not even stocks. It is ETFs, and more specifically, index fund ETFs. That is where we are going to want to look to invest our first $100 in 2018. But I'm getting ahead of myself. What even is an ETF to begin with? So most simply, an ETF is just a collection of stocks. So you've got some Apple, you've got some Facebook, you've got some Google, and there is a large index fund that buys up a little bit of each of these different companies and then pools them all in one simple investment option that you can buy similar to a stock, but it is a collection of all of these stocks that you can get exposure to with just a small investment of anywhere between, honestly, $20 to probably like $200 is the average range of the price of an ETF. And the key with an ETF is that you're buying a part of a passively managed fund. So a part of. The key thing here with it being a part is there is a low investment cost. So with only say $20 to $200, you're able to get exposure to huge companies like Google, Facebook, Apple, Amazon. Some of these companies trade, their individual stocks cost over $1,000. So being able to get invested in these companies with as little as $100 is something very, very significant. And the fact that this is passively managed, this is important because with your mutual funds, which are going to be actively managed, you're going to be paying much, much higher fees and expenses to these mutual fund managers. Now with an ETF index fund, the key here is it's passively managed. So what they do is they buy up all of these companies and they just hold on to them. They attempt to track the stock market instead of beat the stock market. So when you're tracking the market, you can just buy up all of these different companies and hold on to them for the long term, and then you as the investor are not paying huge commissions to these traders who are constantly buying and selling investments, trying to outperform the stock market. All right, so we just got into a little bit of the why behind investing in an ETF index fund, but let me cover my 7 biggest things that I really, really like about this investment option. First one is the diversification opportunities. So like I said, you're getting exposure to dozens, if not hundreds, of different companies through this one simple $100 investment. So that is a very, very nice thing, so that if one company plummets, all of the other ones are going to hold their ground for the most part and balance out that drop. So in general, you're going to move with the market and you're not going to see huge significant drops in the value of your assets because you're generally following the market. Next thing I like is transparency. So with index funds, with ETFs, you really know what you're buying. So you can go to the summary page of your ETF, wherever you purchased it from, and you can see exactly where the assets are allocated. So you can see, all right, 4% of this company, or 4% of this index fund rather, is invested in Google, and 2% is invested in Apple. And you can just see all of this breakdown so you know if this index fund aligns with your beliefs and the companies that you think will do well going forward. Additionally, they are customizable. So with an ETF, you can really choose any sector or any industry or anything that you want to invest more heavily in. So there are ETFs dedicated to gold, there are ETFs dedicated to utilities, to the technology sector. all of these different sectors have the opportunity to be invested in through an ETF where you can balance the risk that you want to take because you're not overexposed to one certain company. Next, like we said before, ETFs have much lower expense ratios and fees when compared to their mutual fund counterparts. This is because they are just buying and holding, and they're not trading super regularly, causing you to need to pay this person to work on finding the best investments for you. Going along with that, because the index fund is employing a buy and hold strategy, you are paying much less in taxes. So just briefly, there are really two kinds of taxes you can be paying on your investments, either short-term capital gains or long-term capital gains tax. Now, this is determined by how long you hold the investment. So if you hold an investment for less than a full year, then you're paying short-term capital gains. More than a full year, long-term capital gains. Now, with your short-term capital gains, so less than a year, you're going to be taxed at your normal income tax rate. So this is going to be pretty high depending on how much money you make. However, if you hold it for more than a year, your tax at that long-term capital gains rate going to be much lower, going to be lower than your income tax bracket. So with your index funds, because they're buying and holding, they're going to be holding them for more than a year, and therefore you're taxed at that long-term rate. Whereas with a mutual fund where they're actively trading, trying to outperform the market, you are going to be hit with that short-term capital gains rate and much higher taxes, which is going to be reflected in lower returns from this investment. Additionally, ETFs are no load, which means there is no minimum investment that you need to put into them in order to be able to invest in them in the first place. So you just have to buy one share of this ETF and you're now invested. Whereas with a mutual fund, a lot of them are going to have minimum requirements. You're going to have to start with something like $1,000 to $2,000, sometimes even $5,000 for your initial investment. And that's really not realistic for a lot of people who only have $100 and looking to invest $100 in 2018. If they're a college student, $5,000 to throw at a mutual fund might not be the most realistic. And like we just talked about, mutual funds might not even be the best investment for you anyways. And lastly, the fact that an ETF trades just like a stock makes it a lot more convenient than something like a mutual fund, which you can only buy once per day. ETFs trade throughout the day, so you can get a really good feel for what the fair price is of that ETF at any given time. They're a lot more liquid than something like a mutual fund or any other type of investment, since it trades just like a stock. Now, how do you actually go about investing $100 in an ETF as a college student? Well, at its most basic, what I'm just going to tell you guys real quick is to just go on Robinhood, find an index fund ETF, and invest $100 in it. If you want a more in-depth breakdown, I have a free course that I created just for you to find a great ETF, a great index fund ETF with only $100. It's completely free. The link will be in the description below, and it's going to walk you through step by step how to find your best $100 investment this year in 2018. And yeah, just a free video lecture course, only 3 modules to it. It's only about 45 minutes long. Shouldn't take you very long at all, and I can guarantee you will learn a lot from the information provided there. So be sure to check that out in the description below. Anyways, guys, that was how to invest $100 in 2018 for college students. If you guys enjoyed this video, be sure to leave a like down below and subscribe to be notified anytime I put out a future video like this one, because I put them out 5 or 6 times a week, depending on how I feel. So be sure to get involved there. Thank you very much for your time. I'll see you in the next one.